Good day, viewers. Welcome to today's episode of the Financial Accounting Made Simple on our channel. In our last class, we discussed the Purchase Return Journal. Today, we are going to be looking at the Sales Return Journal. Mind you, the Sales Return Journal is also known as the Return Inward Journal. The Sales Return Journal is a book of prime or original entry that is used to record goods that are returned by customers for their purchase. It is good to know that when goods are sent back to the seller by the customer, this can result as a result of wrong color, wrong description, not choice of the customer, and in this case, the two accounts that will be involved is the customer that is returning the goods and the return inward account. It is good to know that the accounting procedure under the sales return account is to debit the return inward account and credit the individual customer's account. Let's look at the question under the business of Femi and Sons Enterprise. If you have been following us on this channel, you realize that when we started with the sales daybook or the sales journal, we use the transaction of Femi and Sons. In this case, Muibat and Rojamila, they bought goods on credit from Femi and Sons. The two customers are now returning part of the goods bought to the seller. Let's quickly look at the question that we have on the sales return journal. We are to write up a sales return book of Femi and Sons for the month of July 2005 and post to the ledger. July 3, 2005. So we come here, we have our date as 2005, July 3. So we have two customers returning their goods back to Femi and Sons. And these customers include Rujabina. And Moribat. On July 3rd, Rujamila returned one bag of sugar at 40 naira. So we have one bag of sugar at 40 naira. So under our details, 1 times 40 will give us what? 40. And in return, 3 plates at 140 naira each. 3 plates at 140 naira each. So here we have 3 plates at 140 naira each. So 3 plates at 140 naira each will give us 460 naira. Sorry, this will give us 420 naira. 420 naira. So we add up the two together, we have 460 naira. Mind you that when we sold to Rojamila was not given discount. So in this case, we are not going to apply early discount to this account. So Muibat returned 3 shoes at 65 naira. 3 shoes at 65 naira. That's July 30. July 30. 3 shoes at 65 naira. 3 shoes at 65 naira will give us 195 naira. 3 shoes at 65 naira will give us 195 naira. 2 packet shirts at 13 naira each. On the same day, he returned 2 packet shirts at 13 naira each. As 13 naira each. 2 packet shirts give us 26 naira. When we add up this, we have 11, 12, 2. So that's 221. So we can now get 5% discount that was given to Muibat. Less discount, 5% of 221. So 5% of 221 will give us 11 naira. 11 naira. So when we sum up this, we have, when we take out this, we have 0, 1, 2. That gives us 210 naira. So 210 naira. Yes. So I'm reaching out the total here. So the total column. That's 416 naira. So when we add up the two together, we have 670 naira. So this 670 naira will be transferred to Return Reward account. Transfer to Return Reward account. So we are done with our journal. All we need to do now is to transfer our balances to our Return Reward account and other expecting ledgers. So we have prepared ledgers for Rojamila, Muibat, and Return Reward. Don't forget, Rojamila and Muibat, they are customers that are returning goods back to the seller. So for their respective accounts, we are going to credit the account and debit the Return Inward account. That is the accounting procedure for Return Inward Journal or Sales Return Daybook. So here, we are going to debit Return Inward account to complete the double entry system or this account. We have July 31st, sundries. We are putting a total of 617 naira. We now have July 30, Return Inward, 210 naira for Muibat, and for Rojamila, July 3, Return Inward. We have 460 naira. These are the steps you can use in preparing your Return Inward journal or Return Inward daybook. I believe we have learned something today, and we have gained more experience in preparing our accounting record. Thank you for listening. See you in the next episode.